For our COBT listeners and viewers, it's Maynard, Mike, and Robbie Kester here with a particularly special guest. Today we're going to talk to Dr. Fiona Murray. She's a professor of entrepreneurship at MIT. She is a long-known and very famous innovator, particularly working in the space between deep tech, academia, business, and in particular startups. Showing us how to take science and turn it into companies that impact the world. Dr. Murray, we're so happy to be with you. We want to thank our friends at Halliburton Labs for connecting us with you. And you and I will be doing another conversation on Wednesday, so you're getting way too much of me. So double thank you for joining us and talking about these great, interesting issues of our time today.
Well, thank you for having me. It's really a pleasure to be here, and I'm looking forward to today's conversation and, of course, the conversation tomorrow.
Well, before we jump in with Dr. Murray, Mike, what would you tell us about what's happening in the world?
Yeah, Maynard, I'd say if I were going to classify it, this week is all about the State of the Union address, right? That's going to be happening tonight. And so, from a bond perspective, I think people are going to want to hear what Trump has to say about tariffs, additional tariffs after we had the Supreme Court, shut down those tariffs last Friday. And you also see basically all eyes will be on PPI later this week for bonds. As far as, WTI price, the State of the Union, we're also, thinking about what is the state of Iran here? What is Trump going to say about military engagement with them potentially? So the markets are going to be looking at his State of the Union speech to see if they can pick anything up there. I'd say WTI right now is trading at $66 a barrel. That's up from low 60s. A lot of that is because of basically this Iranian threat. Trump was out there talking about a 1 or 2 week deadline. We're quickly approaching that deadline. And so if we do get a nuclear deal, we would not be surprised at all to see oil prices back in the low 60s. That's a really good thing. But if we have some confrontation at $66 a barrel, it wouldn't surprise me we start to breach $70 a barrel. That's probably not a good environment for oil and gas prices, for oil and gas stocks. We want to have an environment where you have a deal, oil prices come back in the low 60s, and people will start to normalize that out. I think that's the best case scenario. So there could be some volatility coming out of this. I'd say as far as the Supreme Court last week, shutting down these tariffs, the market is actually up since Friday, up about 0.5% on the S&P and Dow. You wouldn't have expected that when that all came down, but that's what we're doing. That's where we are right now. As far as energy performance, we're up around 2% over the last week, but we're actually down about 0.5% since those Friday tariffs were removed. I'd say as far as what we've seen here in the last week in energy is a lot of E&Ps are reporting. We're going to see a lot of more E&Ps reporting next week. And I kind of, as we talked about this over the last week or two, is we're going to hear just flat production profiles from all these companies. And sort of with Diamondback Energy, it kind of says it's their sort of yellow light scenario. That's what we're going to see from these companies. This is what they're going to talk about. I'd say as far as, the overall markets, the things that stood out to me today were an AMD deal with Meta. They got a 6 gigawatt deal to supply chips to Meta's data centers. AMD's up about 10% on that news. And they're also getting like 160 million in warrants, 160 million shares in warrants. And so they're going to be taking a big percentage interest in AMD. AMD stock's up about 10%. So that's really noteworthy. I'd say the last thing that's kind of caught my eye here is over the last week or so, you've seen IBM is down 11% in the last 2 days and down probably around 20, 21, 22% over the last 2 weeks. And one of the reasons why I got hit this week is because this AI startup Anthropic, right? They're talking about this Claude Code tool that's going to be able to basically go out, after IBM's computers that have this COBOL on these computers. And I mean, this is the latest guy that's gotten hit by this AI stuff. We've seen over the last 3, 4, 5 months, stocks, be it software companies, logistic companies, tax advisors, consultants, whatever it may be, have been basically pounded on this, thought that AI is just going to it's just going to deteriorate these industries and just turn them upside down. I don't know what the truth is. We're having a bit of a rebound today in some of these tech stocks, and so that's going to continue to be out there. The last thing we'd say is, and we always talk about this, NVIDIA, right? NVIDIA is going to be reporting after the close on Thursday. That is going to be a big deal. They're going to be reporting after the close here in the next couple of days. That's a big deal. NVIDIA is obviously the bellwether. My guess is they're going to have good earnings, good outlook, but if they don't exceed on expectations, that's going to mean trouble for that stock, the NASDAQ, the S&P 500, because it's the biggest market cap company out there. So NVIDIA is going to be on everyone's basically screen this week. And so we're looking to see where that, what happens there.
All right. Well, what a perfect week to have you, Dr. Murray, when NVIDIA earnings are coming out. I was also thinking, I noticed in the news today is the 10th anniversary of the first LNG cargo to leave the U.S. So kind of a big deal from the first one to the leader in the world. Robbie, anything you'd share before we jump in with Dr. Murray?
No, just spending some time right now on, speaking of AI, foundational AI models and what that means in terms of companies developing a lot of their own applications. How do they adapt it? How do they get value out of the technology? So lots of activity happening there and a lot of innovative companies. So,
well, we've got our AI roundtable this week.
That's right, and the AI roundtable.
It's always good. Well, Dr. Murray, thank you again for joining us. And there's one thing Mike was mentioning, Iran and the State of the Union and all that, and I should have mentioned up front. Geopolitics and innovation is definitely a topic that you're extremely close to. You're the chair of the NATO Innovation Fund, which we want to hear about. But just that topic of, as Mike was going through supply chains and the geopolitics, and as if innovation wasn't hard enough, to go from the drawing board to something impactful. We've got these other issues. But welcome.
Yeah.
We're delighted to visit with you.
Thank you. And look, it was actually fantastic to hear that sort of roundup of the perspective of the week. And you talked about, this intersection of geopolitics and innovation. I think we might have always thought that if I'm running a major oil company and the energy sector in general has always been incredibly sort of alert to and sensitive to the geopolitical moment, sort of captured in a sense by the oil prices, but obviously, much more complex than that. I think the real shift that we've seen in the last, almost a decade, and I would put it sort of to about 2016, and maybe one of the first national security plans that came out of the first of the Trump administration, was really, a much broader horizon of geopolitics, reading on to all kinds of different technologies. This sort of idea that there are priority technologies that really matter to our economic growth, but also our economic security. And what that means to me is that entrepreneurs who might have been able to just sort of assume kind of global competition and operate within that are now having to become much more savvy about the geopolitical landscape. And of course, it might be the fluctuations in oil prices, commodity prices, but it's also tariffs. It's about capital controls. It's about export rules. And frankly, it's conversations about whether or not US investors are going to be sensibly investing in Europe, how the Europeans are going to respond to that, and some of the sort of schisms and fractures we're beginning to see in these markets, at least in the short run. And so for me, that's a really different set of discussions to have, particularly with entrepreneurs taking their ideas out of the lab. A whole different set of opportunities, but also a different set of risks to be considered.
We've really enjoyed getting to know you a little bit in preparation for this discussion, but in watching some of your pieces on YouTube and that are available otherwise, it is really interesting. You're a global innovation thinker and helper and advisor, and so you see all these places around the world where people are trying to do innovative things, and it is very interesting to think about if you're a European innovator right now. Are you trying to get your product to the U.S., which is a really big market, or are you really developing it in a way to think about, well, I should develop it for my home market because there's tension? Like what do you notice? What is the overlay of all this tariff trade, geopolitics? How is it affecting innovators business models or plans or ambitions?
Yeah, look, I mean, I spent, was it last weekend, not the one we just had, the snowy weekend, but the one before that at the Munich Security Conference. And I think traditionally you would have thought of the discussions in the corridors of the various sort of locked down hotels in the Munich Security Conference to be often in the last few years about Ukraine. Last year, JD Vance came on behalf of the US government and I think, gave a quite notable speech. And so people were really focused on the relationship with the US. This year, I think there was a really, big set of questions. What was the US going to say? And how should we be thinking about the relationship between the US and Europe? And what does that mean for NATO? But also, what does it mean, particularly in the light of tariffs and so on? How should companies in Europe start to develop their plans? And how should European governments think about their dependency on some of the most extraordinary technologies that are coming out of the United States? And so this discussion of technology sovereignty, the word sovereignty was a lot on everybody's mind. I'm not sure that everyone is quite sure when they say that. Do they mean that at a national level? Do they mean that at a European Union level? Do they mean pan-European? Do they mean NATO? Right? And I think that is really up for grabs. It's also a question of the tech stack. And you've talked about NVIDIA, but obviously we talk about the energy. How do we power these systems? The large language models that sit on top. And then, you've already raised in this discussion, how are we going to use this stuff? So people, I think, are starting to kind of dissect those things. I think European companies, especially entrepreneurs, really value the interactions they have with the US market. They learn a lot from these markets. And they value American investors. American investors often have quite large venture capital funds. They're able to follow their companies, across the life cycle. An investor like General Catalyst, for example, can invest early and then, follow along. But it is becoming a topic of conversation, particularly in companies doing defense and security, sort of dual use in defense. How should we think about having US investors? How do we mix that up with more European investors? And what does it look like to go across the Atlantic? My experience is that the companies are absolutely positioning themselves sometimes as an alternative so that there's more resilience in either supply chains, communication systems like satellites, say space launch technology. There's a really brilliant German company called ESA Aerospace that's actually created by a group of SpaceX alum, learned a lot from SpaceX, coming over next generation. And part of how they think about the market is to say, look, we need alternatives. That makes us all better off. It's more competitive. It creates a bit more resilience. So that's the conversation that we're starting to see at the moment.
Do you think I was having a flash to my youth and when the EU was, really had its most momentum? We were going to break down all these trade barriers. It was going to become this huge market that's bigger than the US. It was going to rival the US. It just had all this positive connotation and ambition. And now sometimes the image you get is, that the layers of approvals and it is slowing down innovation. I know that's a tough question, but is that how do you think about European innovation? Because there's so much talent, so many incredible things, but yet some of these issues, whether it's bureaucracy or energy cost or things like that, how do you think about the state of European innovation?
So certainly when I go around Europe and I meet with young entrepreneurs, they often have very much the same sort of spirit and energy and dynamism that I would find if I was walking the corridors of MIT. I spent a lot of time at TU Munich recently. I spent time at Oxford. And I'm absolutely minded by the fact that these young people are equally committed and they have brilliant ideas. And the beginning stages of these startup companies, when they're getting out of the lab and starting on that journey, I think is really quite powerful. And we're seeing some things that look very, very similar. The challenge, though, is that they run reasonably quickly into, as you said, quite a lot of bureaucracy, particularly in Europe, a little bit less in the UK. They run into smaller funds. So on average, the venture capital funds tend to be smaller. And some of that is to do with the regulation of pension funds and what have you. And so they can't always get the same running start because they don't get quite the same amounts of capital at the beginning. And then absolutely, you have fragmented markets. I mean, again, at their best, these very different markets might be sources of experimentation, but frankly, at their worst, they become really, really fragmented. And, we see this in defense in particular. some of the startups working on, drone technology, counter UAS technology are running into many, many different types of markets, different requirements and specifications, really different purchasing processes. And so, of course, they're not going to be able to make progress nearly as quickly as their US counterparts. And so at the moment, although the spirit, I think, is willing, and NATO in particular is trying to create interoperability, standardization, there's a really long way to go. And the Draghi report reminds us of that. But the talent is there, and these businesses are incredible. I see way more dynamism in the last 10 years. And as I've said, particular places, Munich is my current favorite, Oxford is my alma mater. I love going to see what they're up to there at Oxford Science Enterprises. And I think you'd be really so delighted if you see some of this, but you definitely run into the buzzsaw of a very fragmented, overly bureaucratic market.
You mentioned that NATO's efforts, which you're involved in, and also just the intersection of defense and innovation. Do you mind just talking a little bit about NATO's efforts and your experience around defense and technology?
Yes, of course. Let's sort of set the scene in around 2020 when NATO was looking across the NATO allies and asking, are we really tapping into all the innovation that's coming out of the private sector and particularly startups? And some of the leadership of NATO kind of looked across the Atlantic and recognized that the US had really led the way, particularly under Secretary Ash Carter around 2015, setting up the Defense Innovation Unit, and DIUX as it was called, to really try to tap into some of the Silicon Valley sort of spirit and say, look, there's an amazing source of entrepreneurs and innovators, these dual-use technologies we could apply to some of our big defense problems. And a recognition that if you could get some of that private sector ingenuity and private sector capital to be put at risk because there were going to be big opportunities, there was a real dynamism around that. And NATO, I think, reasonably said this is not happening on the other side of the Atlantic. And it's not just about defense spending, it was about whether or not investors saw defense as an investable category. And they stepped back. I worked with them quite closely on some of the design, and they did two things. The first thing they did is sort of create something that's called DIANA, the Defense Innovation Accelerator of the North Atlantic. Bit of a mouthful, quite a nice acronym. They put forward sort of challenges where they say, look, if you could solve this challenge of securing pipelines, for example, from adversarial intent, that would be an interesting thing for militaries. So it's trying to sort of pose problems so that the defense, security, and resilience challenges that NATO might have are a little bit more obvious to entrepreneurs who are less connected. So they create an accelerator network for a set of companies. But they also wanted to crowd in capital and were somewhat inspired by Incutel, right? So the sort of CIA venture fund sort of model, but said, how do we do this in a multi-sovereign way? And so they set up something called the NATO Innovation Fund, which I have the privilege of chairing. And it's basically a private venture capital fund with a board, which I chair, where we have a set of fantastic partners whom we hire to really go out across the 24 contributing nations and find the best defense, security, and resilience startups. And we make equity investments in those companies. 24 NATO countries are our limited partners, and they put in, they've contributed up to about €1 billion. And it's a really interesting opportunity to start to absolutely sort of catalyze these innovation ecosystems across Europe and really get those young innovators focused on, as I say, these really significant defense, security, and resilience challenges. And we're seeing lots of interesting things happening, both in some of the markets that I've just talked about, but also in places like Estonia, Bulgaria, the Nordics. Incredibly interesting sort of opportunities, I think.
Do you mind talking a little bit about this this notion of a innovative ecosystem and how we're sitting here in Houston. Houston has a number of the ingredients, I think you might say, that contribute to something like that. But how you think about that and where you see them and how you can cultivate them, that's a really interesting discussion.
Yeah, so I think about an innovation ecosystem as a place. It's geographical in its sort of construct that often doesn't follow very neat and tidy political or sort of state or city or town boundaries. It's a place where you have a very dense concentration of innovators and entrepreneurs, typically risk capital, universities, and usually some sort of government and large corporate as sort of a customer base, if you like. And they tend to be places that are very rich in resources, talent, capital, which often follows, infrastructure to support those, particularly those early stages of the entrepreneurial journey. And what really characterizes the best of those ecosystems is the dense interconnections amongst those individuals. People don't just sort of stay in their own lanes. They're always willing to come together as a tightly interconnected community, exchange resources, invest quickly, support experimentation and learning. Silicon Valley is probably the most iconic of the innovation ecosystems. It's unusual because it's so diversified across so many different fields and sectors. Boston is probably the second most famous, a little bit more specialized in things like the life sciences and increasingly in energy and sort of green tech, robotics, and to some extent defense technology. Houston definitely is a place that I think you're seeing that emergence. You've obviously got the powerful universities, you've got some of the large oil and gas companies, Halliburton and others. I think the thing that Houston has sometimes been missing is those big companies have been so successful that the entrepreneurs don't come out, right? They get sort of stuck in excellent jobs that give them jobs for a very long time. But really, when places like Rice start to help support entrepreneurs, you're beginning, I think, to get that real entrepreneurial energy there. And we see this outside of the US. So we definitely see this in the UK in what we would call the golden triangle between London, Oxford, and Cambridge. You absolutely see it in Munich. You see it in Berlin, but much more around digital tech. Munich is much more, builds on its sort of more robotics, industrial history of the auto industry. Singapore and China. So Shenzhen is a really interesting example of an innovation ecosystem, much more focused on supply chains, microelectronics and so on. But absolutely, it's a sort of a concentration and specialization in something with a very entrepreneurial flavor.
So you mentioned China, and China, I think, by most accounts, it's the geopolitical foe of the United States.
Yeah.
How does a country that thinking about innovation there, like there's obviously a heavy overlay of what is in China's best interest and national security, like they just seem to be extremely focused on that in a way that we have been slower to do. But yet they combine this heavy government hand with strong policy indications with innovation and direction. It just kind of begs the question how, because there's so much public direction of activity right now in so many countries. How do you do that effectively? Like, how has China, do you notice anything about their formula that we could use or that we could learn from? Because it's really been a stunning, and you've got papers and details on this, how fast they have come up the curve in so many categories.
Yeah, I mean, look, a few things. I mean, certainly it's true that China is, the peer adversary of the United States, is definitely, peer competitor, and we are in the midst of sort of great power competition. The US and our innovation ecosystems, I think, have largely grown up under a model that is a model of global sort of competitiveness, and the idea that having these open exchanges, open ecosystems is the most effective way to build and to drive ingenuity at scale. But what that came with was a willingness to say, look, we've had the ideas, but let's build the manufacturing and the supply chains wherever is the least expensive. And China is the least expensive. They became incredibly specialized in those things. I think we're seeing a moment where we're beginning to try and pull some of that back and say, actually, we need to innovate all the way from idea through to impact. Now, if we go over to China, a lot of what happened in the evolution of China's innovation ecosystems was this initial specialization on, cheap electronics or manufacturing, but they got incredibly, incredibly good at that. Some technologies, batteries are really instructive. I mean, some of that technology was generated in the United States. Some of it was explicitly licensed to China. There has been some formal and informal and illicit technology transfer, all of the above. But then you've really got the government pushing on certain markets, right? Subsidizing markets, deciding which markets matter to them. But underneath that, a tremendous amount of competition. And so it's a really interesting mix, I think, of industrial policy that says, no, these are the markets that matter, and they matter for economic growth, but they also matter for national security. We will subsidize those markets, but we'll allow lots of within internal Chinese competition. And I think that's where it's a nation that has been able to build its own innovation ecosystems and actually have quite a vibrant innovation economy that is much more directed, as you say, towards some very specific end markets, and a real willingness to also subsidize and focus on areas like critical minerals, focus on processing technology, and not worry quite as much about regulation and environmental controls. And so I think we can actually learn quite a lot about, we're not going to replicate, nor do we wish to replicate China's industrial policy, but I think we have to recognize that we now live in a world where innovation is not just governed by kind of geopolitical logic, it's not just governed by a kind of global competitiveness logic, it has to be governed by a geopolitical one as well. And we're in that moment of trying to work out how to balance those two things.
And just while we're on that, how risk-taking and the entrepreneurial culture with which you're so familiar, how do you think about that in the Chinese context? Because risk-taking and innovation are they go hand in hand, but sometimes if you're in China, risk-taking seems a little scary. So how do they incorporate that, do you think?
So, I mean, I've learned a lot from my colleague Yashang Huang, who is a deep expert in the Chinese innovation economy. And there has been a phase where innovators and entrepreneurs were given, I think, quite free rein to really build their businesses and cause them to grow and be deeply successful. We've obviously seen a whole variety of incidents that have kind of reined them back in. And so I think we don't yet know the impact of that in the long run, because a lot of what we're seeing today are the fruits of a slightly more open era that allowed for a lot more entrepreneurial freedom. And we see that really playing out also in industries like the life science industry, which is incredibly effective at the moment. Large numbers of new drugs being developed, being regulated in ways that allow them to get through the regulatory hurdles more rapidly, being manufactured. A lot of that is based on things that entrepreneurs who went back to China a decade ago. I don't think we know how the current regime, which is, I think more strict on entrepreneurs and risk taking, how is that going to play out? We should see that, I think, as an opportunity to say, how do we do things differently here to make sure that the next cycle of innovation, including in areas of energy like fission and fusion and storage and next generation batteries, how do we make sure that we not only have that private sector ingenuity, but we actually scale those solutions? Because that's really how we're going to get the benefit and not be sort of held to ransom because we don't control some of our production and supply chains.
Yeah, Fiona, I really wanted to ask you about American entrepreneurs and maybe just American students, especially your students. I kind of think of the world here over the last five or 6 years. You've had basically, energy transition go from we don't need fossil fuels to hey, we need all the fossil fuels we can get and materials we can get to basically support global economies. We've had basically COVID. We've had a Ukraine war. We had the rise and fall of cryptocurrencies, and now we have the rise of AI. And so maybe just give us a sense of your students, given this world is changing at light speed, some of the opportunities and some of the barriers that they see. I mean, where is their sentiment right now? Is it a positive sentiment? Is it like, we don't know what's going on in this world, we're stepping back? What is the general sentiment from your students?
I mean, look, I have a great privilege of teaching at, one of the world's finest technical institutions, and we have extraordinary students. I think at the moment we're considered the best business school in the world as well. So first, I feel really fortunate to do that. I will say that when I first got to MIT, and that was all the way back in 2000, not many of our students thought that their job was to sort of get a fine education and then go out and become engineers in large engineering companies, join the oil and gas industry, the chemical industry. The MBA students would become consultants and bankers. Fast forward 2008, economic crisis, many of them, those employers didn't show up on campus anymore. And we saw a real secular shift to students saying, actually, we're going to create our own jobs. We're going to be entrepreneurs. And that shift really never, changed. And so although the employers did come back, I would say we really have a generational shift. By the time you got to 2010, entrepreneurship was an incredibly legitimate job that people would say, this is why I'm coming to college. I'm going to do this, business school. I'm going to find my co-founders and do something. The really interesting dynamics that we've seen is what are the areas that really get the most student attention? I'd say that, early 2010s and so on, it was still healthcare, life science, biotech. And then we started to see this big shift towards energy and climate. We saw the creation of things like Greentown Labs in Boston and all the support systems that I think you also have down in Houston as well. And so we had a lot around climate tech, clean energy prize. The shift post-COVID, and particularly post the war in Ukraine, was a massive recognition that defense, security, and resilience was an equally important mission and calling. And rather than defense being something very, very narrow for a few people who were often military veterans and had, served the country very, very proudly, who we were always so delighted to have on campus, but who were doing something quite niche. Now I would say that our work on defense and dual use ventures is absolutely central, and people see not just sort of defense narrowly, but security and resilience being key to what they want to do. And I also have seen energy and some of the climate work kind of reframed. And some of that is just labeling, but I actually think some of it is about really building more resilient energy systems, trying to tackle the critical mineral challenges. And so I think our students are actually very positive about some of the opportunities. On the AI side, our technical students are all over that. I think our Intro to AI is the most popular undergraduate course we run. Lots of positive opportunity. Perhaps less of that is in Boston, lots of them going to the West Coast. Our MBA students, our business school students, we're making sure we incorporate that into the curriculum. A big set of questions about those who want more traditional careers, what it's going to look like. Definitely seeing some of that, but a real shift towards entrepreneurship is, I think, here to stay.
What's really interesting is what you just said about resilience, because when I think about the energy trilemma, it's been affordability, reliability, and sustainability. And when I hear you say resilience is something that your students are really kind of gravitating to, that is really interesting to me.
Yeah, I think, and it's, you can think about it in a few ways. And so, if I'm making products or I've got a system, am I thinking about energy storage? Am I thinking about energy being produced closer to where it's needed? And I think a lot of the shifts we're seeing with some of the data centers, and you mentioned that in your introduction, are we thinking about doing things kind of behind the grid, right by the data center? A lot of interesting solutions. For example, for quite a long time, I think our nuclear energy department, our nuclear engineering students, that wasn't the most fashionable thing to do. Increasingly, they went into fusion, and that was the thing that they were working on. And we have a huge amount of fascinating work with people like Commonwealth Fusion Systems. But I'm increasingly seeing students gravitate back to fission to say, how do we repurpose old technologies in new ways, new balance of plant, new financing and ingenuity? And so there's some really interesting pockets, I think, of change when you frame it as resilience, which is pretty intriguing.
Yeah, I have probably a million questions for you, but really thinking about innovation, I love how you think about it as a process. So you're going from technology to like realizing value. And it feels like right now with AI, every day there's like so much change. Things are rapidly there's all these new types of technology. But I think a lot of companies are struggling in the realization of the value. And so, as you think about innovation and the process, how does that process need to change to keep up with all of this technology innovation?
Yeah. I mean, for entrepreneurs, I think the big opportunity is that if we use AI well, then the cost of experimentation goes down. And so we've seen some of that starting to be applied, for example, in material science. Traditionally developing new materials was really costly and complicated. But can I use AI to help me explore materials space, create new alloys, test them, simulate? And so if I can massively reduce the cost of experimentation through much, much more effective simulation, that I think is part of what entrepreneurs need to take on board. There's a fascinating new company being created in Boston called Lila AI, which is trying to really sort of use AI very deeply into the scientific method to design new materials, new medicines, but connect it up to sort of physical automation of the scientific process. And so some of the companies on the cutting edge of that, I think, are really important. For big companies, this is a more difficult issue, I think, because they've got to think about how does it feed into my products, but also my processes and my back office, right? And the failure mode that I've seen in most large companies that I work with will be really a lots and lots of tiny experiments. We'll all try something. AI is for everybody. And then a real sort of difficulty in saying, okay, but what's working? Let's shut down the stuff that isn't, and let's really scale the stuff that is. And so trying to actually get impact at scale requires a pretty disciplined portfolio approach, and a willingness to experiment, but then push some of the good projects through to acceleration, adoption, scaling, both customer facing and otherwise.
Yeah. Do you think for a big company, because I think in one of your other podcasts I was listening to, you mentioned like the big eye, the big innovation versus the little eye, the little innovation. For big companies, should they focus more on the little eyes initially, or go for like a moonshot big eye type innovation? Like, what's your
I think it depends on really the strategy of the company. I mean, like if you're in a super competitive industry and you have very low margins, I think that there's some real benefit into saying, how can we use AI really effectively, across all of our balance of plant to make all our physical processes more efficient, to get our data sorted out, and to really do some of the things that I think are actually quite low-hanging fruit, but really difficult to implement at scale. If you can convince yourself that there's a massive new business that takes your existing assets and you wrap AI around them, I think Saudi Aramco is thinking really seriously about this. What is that going to look like for them? You have to have a significant balance sheet to, I think, take on some of those really big eye projects. They're expensive, and you have to do it well. And typically one shot on goal, think about the big investors. They don't make one shot on goal with those 10x projects. They make 10 or 20. So how do we think about that if we're a big company? And so, I think there's quite a lot to learn from, as I say, the balance sheet of some of the big oil companies is quite interesting opportunities to do some of that big eye, but you've got to manage it well without the, bureaucracy that is not, and I don't mean that in a negative sense. It's just the way those projects are best run, we can learn from some of the best entrepreneurs in the world who are doing that with sensible pace, really careful de-risking and milestones.
I was wondering, Dr. Murray, if you wouldn't mind, I'm like Robbie, there's so many questions we could ask you, but drones and the way that drones have changed warfare in Ukraine, all the innovation around those, and then when you pull that into the broader application of drones, robots, automation, like that's a space that's just it doesn't even seem like we've even begun to really get going on what it could ultimately be. Do you mind just talking about that drone automation, et cetera, space in particular?
Yes, of course. So I think we've learned quite a lot from Ukraine about the use of drones. I mean, and very sadly, right, it's sad that we have had to have those learning opportunities. But, we've learned about warfare and the nature of modern warfare and what military folks would talk about concept of operation. So we've learned about how you actually can replace individuals at the front line. For example, we have a company in the NATO fund, which is called ARCS, which uses automated autonomous ground vehicles to go and take the wounded back from the front lines. And so we've learned all sorts of things about that. And that's, I think, things that will feed into military doctrine. But we've also learned about innovation, the fact that particularly when you have this toolkit of parts and things, so drones are not massively deep tech, right? They're taking a lot of existing components. You can get very rapid iterative cycles if you're very close to the end user. And so if you're close to the warfighter, some of the most effective companies are the ones that are trying this out. And you realize that in war, very quickly, if you're operating in a GPS denied environment, you have to sort of iterate and change how these things are going to work. And the third thing we've learned, I think, is about supply chains and production. Right? That we don't need one drone, we need millions of them. And so that puts huge pressure on our production systems and our supply chains. And the US, the Ukrainians, the Europeans have been held up because their supply chains run through China. And that has been really problematic. And so those, I think, are the things that we've learned about innovation more generally from Ukraine. A lot of the work in autonomy, you're right, is sort of pushing the boundary of autonomous systems, drones, swarms, multiple autonomous systems together. And I think bringing us right back to saying, what is that going to mean for using this in other, maybe more traditional manufacturing contexts? I think that we're going to start to see this hugely transforming some of the heavy industries, mining and elsewhere. I mean, that it's not completely new, right? We've seen this before, but this combination of being able to process on the edge the data, I think we'll see hugely transforming some of our more traditional industries. The question about humanoid robots and what have you, this is a very difficult thing for the US to develop well because we haven't got as much manufacturing. And so the question is, what is this going to replace when we don't have a huge manufacturing industry to sort of trial and test? Shouldn't come as a huge surprise that companies like Amazon have been amongst the largest acquirers of robotics companies of various kinds over the years. And so I think the question we're going to have to answer in the United States is, where are the places where we have an actual market? Because without a market, nobody's going to invest and develop this sort of technology. And where are supply chains going to go?
Where do you, because your background is, I should have mentioned, you were a co-founder of the Engine, and so which was completely focused on, how do we do dramatic innovation, particularly around hard tech. It seems like one of the questions, and you just touched on it, that people keep having is, it could be a nuclear plant, it could be a product, it could be any kind of, physical kind of heavy manufacturing. Can we do it again in the West the way we used to do it? And can we compete with the Chinese? Can we onshore all these things? How do you think about those challenges as we get focused on supply chains and all those things? Like, do you have I almost want to ask you what the odds are we can do this, but we're going to have to do a lot of things differently.
We will.
To get that right. So what do you think the state of that outlook is?
So we've done a lot to get the front end right. So in my idea to impact sort of journey, a lot of the original conception of the Engine that was led by the MIT president and then brought in Katie Ray to sort of set up a lot of that, and I've had the privilege of spending a tremendous amount of time with them, has really been to ask the question, what kind of investors, what sort of infrastructure, what kind of space, what kind of community do we need to really enable the quite special teams of humans who are going to take some of the leading edge ideas out of labs, whether they're MIT, Harvard, Rice, you name it, and to really provide that so that the early part of that journey can be quicker and more capital efficient. Because if you give them the right initial conditions, the best start in life, if you like, then we've got a chance for real growth and success. But to get to the part of the journey that you're talking about, which is where some of these companies are really getting to, which is meaningfully scaling, they need more capital, right? They need Series C, Series D rounds of 300, 500 million. This is very expensive. And traditionally, they would have gone offshore. They'd have got capital from elsewhere. But to make that later stage work, and particularly to keep it with the US and its friends and allies, I think we're going to have to basically pay what I would call a resilience premium. If we want things to be produced in the US or, in places in the world that, our partners and allies, we can't expect companies rationally to do that just because they're feeling patriotic. We need to send a signal into the market. I'm a great believer in market signals. And so my view is that without some sort of resilience premium, without being willing to pay a bit of a premium because it is more resilient, it's better for national security, then I don't think we're going to really succeed. So until we do that, the odds I would give it are quite low. As we start to do that, then I think we've really got a chance. And you see this with some of the regulations, for example, around drone components, saying they need to be domestic. Mm-hmm. That, I think, is really helpful. You can regulate your way there, but probably not for everything, which is why I think a resilience premium is important. And my own view is that doing that for things like some of the metals and minerals that we need as part of the supply chain will really make a difference. But no, I've seen hints of that, and there's increasing financial sophistication in these conversations, which gives me a little bit more hope.
It's a great concept, and it's not an expression we've heard yet. Forgive the analogy, it's slightly reminiscent of the green premium, which we know, people struggled with, but this is perhaps obviously a different context.
I got another one. Like I said, I have a lot of questions. When it comes to innovation, China has just been so incredibly innovative, I think, for the past couple of decades. And I just recently read the book Breakneck, and
Yes.
I thought it was really fascinating how they put the American mindset puts so much premium on innovation, on the idea, like generating the idea and the first product. And I think the Chinese approach has really been more on like the process, right? And figuring that out. What are some things from your perspective, we can learn from China, or we need to learn from the Chinese model and adapt it when it comes to, supply chains, or, this next generation of AI, physical AI, like whatnot?
Yeah. I mean, at first, I think is this issue that they pick markets that really matter to them, very large markets, and they're more clear, and they use the government as a customer extremely well. We do that a little bit. So Pentagon is sometimes a fantastic customer. Advanced market commitments are another way. So I think thinking about government as customer, but a good customer, right? Not just let me, pick my friends and what have you, which is one of the things that sometimes happens when you put into place a policy like that, I think is one of the things that we can learn. I think the second thing that we can learn is that when we do that, we get economies of scale, and that's going to help us really get good at manufacturing. But we probably can't get good at everything, right? So specialization is what has driven China in the direction it has, which is to be incredibly specialized in some of these manufacturing activities and then move back towards the earlier stages of innovation, right? They started with making simple products, and then they sort of learn by doing. We're going to have to do more of that. And I think pick the areas in which we do that. That's going to be very important. And frankly, I think there are going to be areas of early stage technology where China's doing fantastically, where we have to get some reverse technology transfer and say, actually, you're leading, but if you want to come be part of our markets, you need to share some of that with us. So there's an interesting question, I think, to be asked around that. But definitely the government as customer, I think, is a powerful piece of that.
I was wondering, Dr. Murray, we're always trying to think, within reason into the future. So we usually limit ourselves to 10 years. And if we've been doing this show in 2016, it would be interesting to see what we were talking about at that point. But as you think about the next 10 years and this change in the pace of technology, which does seem to be so much faster, all these outside influences, what's on your radar as people aren't talking about this, but wow, this could happen? Or, I don't know if it's quantum gets thrown around, fusion gets thrown around, SpaceX is an incredible company. Energy, we probably think too much about it, but it seems to be at the heart of everything in some ways. As you think about some really outside the box innovation that could happen, like what are the out there but possible things you think about?
I mean, look, I certainly think very carefully about fusion. People have always said fusion is 20 years away. I think that it's very different, I think, today, and the view that we might have of that, I think, and if that's true, I think that is going to be quite transformative. It's not only going to be transformative on industries and economies, but also on geopolitics. I don't think it will render all kinds of other energy sources obsolete, frankly. I think it'll take a very, very long time, even if it's successful, for that to scale across the globe. But I think taking that idea seriously is really important. I think that I've been thinking about places, so more extreme places in the world. I've been doing a lot of work with NATO and others on thinking about the Arctic and what it means that the Arctic has become more navigable. We recently saw China and Russia sort of send cargo through one of the Arctic sort of passages. That, I think, is a really important set of questions. I think we're going to have to wrestle with that, what that means for innovation, what it means for mining, and so on. Likewise, another frontier arena is space. So I'm really interested in think a lot about what is going to happen when we start to want to innovate against some of these extreme environments. Huge opportunities, but I think some very, very important questions, because these are often places where geopolitics is going to be right front and center. Jurisdictions are really unclear, but the opportunities are going to be huge. And so for me, it's very much sort of innovation at the extremes that I'm thinking about.
You know, I was thinking as we wrap up, there's this, it's a question that you can just clear the room with now, is if you say, well, we have to win the AI race with China.
Mm-hmm.
And that seems totally true. However, you can use that to like spend trillions. I mean, it's such a proposition. How do you think about us navigating all this AI spend and ambition and competition and not and not having too much damage, so to speak? Like it just looks like the environment is set up for us to do some big overspend here, and I just kind of wonder about that aspect of this.
I mean, I think in 5 years' time, the question I would have is, are we really going to think that the large language models are the things that are the winning object, or are they actually going to ultimately become commodities upon which we build? And that the real question is going to be, how do we use these things well? We're going to be continuously using highly sophisticated, very specialized models within organizations, regions, countries. That's still going to mean compute matters, and the way in which we, the way in which we resource that compute is going to be incredibly important. I do think that some of our almost over focus on this very specific part of the AI stack perhaps is something that is of the moment and incredibly important. But I think reasonably soon that may not be the place where the action is. I think the action needs to be on how we use this extremely well, and we're going to compete and win by using AI, I think, extraordinarily well. But how are we going to resource that with respect to data centers? I mean, those do work in ways that are effective markets. And so again, I'm hopeful that we will really see, we're seeing incredible innovation in people trying to make their data centers more efficient. Their, high temperature superconducting tape is all over these places, trying to sort of make all the transmission lines more efficient, companies like VIA and others. So I think there'll be a lot of action there so that we can actually, make compute more reasonable, so that we can get all the benefits out of AI.
Well, it's a wonderful place to end. We just need to say thank you and let you go, as much as we want to say, wait, we got one more. But this was tremendous. I really want to thank you for your time, and thank again the team at HAL Labs for connecting us with you. This has been just awesome. I know the feedback we're going to get now is like, wow, she was incredible. So thank you so much.
I really appreciate it. And, my dog has been slightly impatient, so I hope you haven't been able to hear him too much in the background.
Well, he was really good. It got dark while we were talking, and, you poor guy. So
yeah, it's all good. And I will see you tomorrow.
Yes. And we'll hope to see you sometime in Houston. Please come see us.
I would love that. That'd be really fun.
All right. Thank you. Thanks, everybody.